You can see here we've just plotted here gold against US dollar 10-year rates, where there tends to be a relationship. Obviously, this chart is slightly out of date. Given the recent geopolitical events, the gold price has recently spiked. But you can see that when investors came very heavily into gold during the last few years, because they weren't really seeing the returns in normal interest rates, there was a lot of speculative positions building up in 2016, and that was a key factor in the rally that you saw up to $1,300, and then there was a bit of a collapse where people actually pared back expectations as they thought thought interest rates were about to rise in the US, and then of course there was a pullback in thoughts about that, because some of the economic figures coming out globally weren't as exciting as people thought they were going to be. And then you see actually the gold price starting to come back up as the investors switch away from interest rates and back into gold. What I've also plotted here on the bottom is the COMEX net speculative positions. And as you see, the last part of the chart there, when the gold prices were spiking up, there was a lot more speculative positions on COMEX. COMEX is currently the largest futures markets for trading gold globally. And that just brings me nicely into talk a little bit about those global futures markets for trading precious metals. So as you see, there's lots of venues around the world where people trade gold futures to take a speculative position on the underlying market. The largest of them is COMEX in North America. There's a very large market on the Shanghai Futures Exchange in China. I have Moscow listed as well, where there is a gold futures market listed. As you can see, virtually every country, major economy in the world, wants to have its own sort of gold futures trading venue. So that leads people to ask me, why does the London Metal Exchange believe it can be successful in this space when there are lots of other gold futures venues already available to trade around the world? And the answer to that is the OTC market. The OTC market trades bilaterally, it is not cleared, and it is dominant in London. The London OTC market, we estimate, cleared about 1.5 billion lots of gold over the last year, which is, really dwarfs the gold futures volumes you're seeing on Shanghai, on COMEX, and all those other venues. And a number of the banks who are involved in that OTC bullion trading recently approached the LME and asked them to look at, could we please put together a cleared solution for them to trade gold futures, because they believe new regulation is going to drive a lot of this OTC volume onto exchange. So what are the key drivers for now actually trying to offer a solution in London? Well, I think there's a lot of efficiencies that can be had through clearing in terms of netting of positions, in terms of reducing risk. The new regulation is going to demand that there is more transparency in the marketplace, and treatment of physical gold holdings is going to be different under CRD4, which is the new regulation that is coming out of Basel. So why does the LME think it can actually provide a solution? Well, we are the main venue for trading of base metals, traded or cleared nearly 3 billion tonnes over the last year. Precious metals share some of the characteristics of the way we trade base metals in terms of the prompt structure, and I'll talk about that just a little bit. We're also owned by the Hong Kong Exchange. Hong Kong and its links into China means that we can actually get the biggest consumption market globally, which is China, involved in this market quite quickly. So what are the key features of our precious offering? We will have the flexible date structure where you can trade tomorrow, you can trade T+2 spot, but you can also trade monthly futures. There will be tradable carries or spreads available between all of those dates, and we will have electronic liquidity from day one because of our partnership structure. In terms of trying to actually deliver the physical gold, there is a huge bullion network available in London. We are going to plug into that, so everything is going to be loco London delivery. And in terms of the collateral and capital management, that will be done very simply through our own clearinghouse, which is LME Clear. So just a little illustration here of how the futures markets will look. You will actually have T+1 trading, which is gold for tomorrow, T+2 spot, and then daily dates out to T+25, and from then on, monthly and quarterly futures out to 60 months or out to 5 years. So a very flexible date structure. I won't go through the contract specifications. You can all sort of take that away and look at that at your leisure. But just to let you know, these are very standard futures contracts, 100 ounces of gold, 5,000 ounces of silver. What I wanted to talk very quickly about before I move on is the capital benefits of clearing. So on here you have an illustration of trading in the OTC market where you have multiple cash flows all passing between different bilateral parties. You have complete credit risk with the bilateral party who you've traded with. But if you move into the cleared structure, you have a CCP which sits in between all of those counterparties. He guarantees all of those trades, and you have an automatic collapse of all those positions. They're already netted. So it's far more efficient than actually trading in an OTC basis. Okay, and I think that brings me to the end of my presentation. Thank you very much for listening.